In the past 24 hours, Bitcoin has come up, as has the entire crypto market. Now, what caused this? We'll dive in. There was a lot of volatility around the ADP non-farm employment change. We had a really good report, in fact, a fantastic one. It was actually so fantastic that the Fed funds rate could actually stay constant in the next FOMC meeting. There's currently a 6.6% chance of that, but there's a 93.4% probability that the Fed will lower the federal funds rate by 25 basis points. Remember, it was almost a certainty that we were going to get a 50 basis point reduction not so long ago. One thing to always remember, all markets are intercorrelated and interconnected. When the NFP data came out, we saw a big surge up before it was released, followed by a big surge down in the markets just after. I'll just zoom in there a little bit so you can see it more accurately. This was a whipsaw moment, and those occur inside the markets all of the time. What is that blue line there? You got it. That's Bitcoin. So the crypto market followed the stock market. Surprise, surprise. We have a rule, and that is the crypto cannot escape the stock market's gravitational pull. As we saw the VIX come down, what did we see? Bitcoin and crypto coming up as well as the stock market. Now, how can we break down what actually occurred here? Before, we had a probability of a 50 basis point decrease in the federal funds rate as the predominant probability that was going to occur. And then you've seen that it's dropped to 25 basis points. A lot of people saw this and said, oh my God, the dollar's going up, yields are going up, pressure on gold, pressure on Bitcoin. And that's exactly how they said it. The problem with knee-jerk reactions is that you need to understand what this actually means. When yields are coming up, the probability of a federal funds rate decrease is actually lowering. That means they're going to lower by less. Now, what does that mean, and why did the markets rally up? That's a very, very important question, and you need to be able to answer it. And I'll help you out with it. The concept here is that even though the federal funds rate has been lowered in terms of the probability of a larger basis point decrease, that means a soft landing and an avoidance of a recession or possible depression is incoming. Of course the stock market and of course crypto rallied, and that took a bit of the shine out of gold. But we need to look deeper into the charts to see where they can go next. The way to do so is structurally. Let's have a look at that and let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS method. When we saw the NFP data being released in the past 24 hours, look what happened to gold. As the yield spiked up and the DXY spiked up and there was risk-on activity inside the stock market and crypto, gold lost a bit of its sparkle. Aww. And then we saw the familiar whipsaw that we typically always see when NFP comes out. You must be aware of event shock. The important thing to understand, event shock is always held by structural levels. For example, leading into the NFP data, we were just underneath and testing the 2661 structural resistance level. NFP came out and wowzers, it sold off hard as the yields and the DXY spiked up. Literally, the DXY went straight up the wall. And as a result, gold said, oh, if you're going up, I'm going down. And that's what it did until people figured out, hey, this is not such a bad thing. That means that there's not going to be a hard crash landing, a depression, a recession, nothing like that. It's going to be a soft landing, if anything. So we saw that 2647 level holding it very well. And there were a couple of lower structural levels as well. But when you get these stronger ones, that's what you want to keep your eye on. And what do? We crash back into the 2661 and gold then backed off, back to 2647. If you know your structural levels, you're ahead of 95% of people that just literally look at a chart like this and say, what's going on? Gold's been around for 70,000 days. Well, it's been trading for that. It's been around a lot longer. And they'll just say, oh, there's a level here, there's a level here, there's a level here. And they'll actually look at price. Believe it or not, from the past couple of weeks or even the past couple of months, if they're really, really good, or they may look at it from the past couple of days. No wonder they get absolutely smashed inside the market. They just don't know where the structural levels are. Also, understanding how all the markets are intercorrelated and interconnected is vitally important. For example, we saw the S&P 500 over the past week or so just come down and down and down, and then it's done a bit of a turnaround. The NFP data was actually a game changer. That's changed the whole perception of the market. Basically, the market was saying, okay, we're doing two things. We're headed into World War III, courtesy of Israel and Iran and all the troubles in the Middle East, as well as we're heading into a depression worse than 1929. You only had to look at Twitter, X, to just understand how bearish people can get. They don't understand. Price is just moving in a wave. All the charts are intercorrelated and interconnected. The NFP data literally pulled a rug on the recession. That's a rug pull you want. Now, just something to realize, when the markets open, those lazy mainstream markets open on Monday, please be aware that a lot of people will be aware that the market has changed character. That could put a lot of positive momentum right across the globe. And expect the Hang Seng, China's indices, and China's indices in general, which are very, very overextended at the moment, to get bled. Ken, why? Because the concept was that the US market was going into a deep recession, depression, end of the world. Oh God, listen to social media, you would throw yourself off a balcony. Pro tip, don't listen to social media. Just listen to the charts and what they're telling you. A lot of money made its way from US markets into the Japanese market and into the Asian markets. Now, the issue is, with the narrative about to change, what does that mean? It's going to come back because the US markets are the best performing markets in the world. Don't be at all surprised if you see mainstream media headlines say avoidance of recession. Depression has been postponed. Everything is fantastic. And what is it all about? As soon as the markets go green, the news stories go green. If the markets go red, as they've been for the past week or so, the news stories get deeper and deeper into the red. My God, if you're getting your signal from the news, please don't do so. You need to get independent. The news always lags price. Just think about it. If you ever read a news story about, the Russell 2000 has been crashed, for example, and you see it's up, you would say, these people don't know what they're talking about. The Russell is up. How could they say such wrong things? Deep in your heart, you already know the concept. The news follows price. It doesn't front run it. News is always old. Price is always current. And it's always moving in a wave, moving up and down, and then up and down, even in a downtrend. So you just need to be aware of the wave-like function that occurs. The key to understand is there are a lot of rules inside the markets, and one of the best ones is Rule 448. Your chart, the chart that you put money into, its price is moved by other charts. Ken, how do you know this is true? Because we do it every single day. We know it's true, but if you're new to the community, of course, a very warm welcome. And please subscribe. You're going to get insights you won't find any other place. And we are completely unbiased. We know the price is moving down and price is moving up, and then it's moving down and then it's moving up, and you get the idea. Look at this blue line on Ethereum. What does that blue line mean? That's Bitcoin. And as Bitcoin was coming down, what did ETH do? It came down. But when it went up, what did ETH do? It came up. So when we look at this kind of action on Bitcoin, we're expecting Ethereum to come up, Solana to come up, Binance Coin to come up, Dogecoin to come up, XRP to come up, ADA, Cardano to come up. The crypto market in its entirety will be following Bitcoin. Now, this has a very subtle and important message inside it, and we're going to look at the structural levels on Bitcoin and also Ethereum as well as Solana, just in a tick. But the key is this: if Bitcoin loses a structural support level, and you need to know where they are, and by the way, you need to mark up all of price history to understand that, and you need to do it in a statistically significant manner. If Bitcoin loses structural integrity, you know what's going to happen to the alts. They're going to bleed. But if Bitcoin finds structural support and then rebases, you know what the alts are going to do. They're going to go ballistic. Therefore, it's absolutely vital to know the structural levels on not just Bitcoin, but also total, because those two structures will be inherited on the chart that you're putting money into. Let's look at Ethereum as a really excellent example. And Ethereum has been quite weak recently, and you're about to find out why. By looking at Bitcoin, what we're seeing is a lot of up and down action. When we had that release of NFP, the markets went a little bit insane. They went up and then they crashed, which was a great buying opportunity if you understood what NFP meant. And then it was all up and down, and finally it looks like it's just retracing at the current time. But where are the structural levels? That is the vitally important question. What you can see here is that we're starting to lose a level of structure. And one thing that I wanted to do is just to share with you what I thought we could see unfolding in the next 24 hours. Just using the indicator from the service, I've just created a range of values that I think that Bitcoin could go to. Remember, when you see negative price action like this, you could think, it's going to zero, it's going to fall through the floor, and it just flips back the other way. It's very important to know where the structural support levels are, because they'll get actioned. What do we see here right at the current time? Bitcoin is 62,046. It's tried to get above this 62,459 level of structural resistance. And you'll notice there are higher levels of structural resistance in here at the current time. So all of this is pushing down on crypto and pushing it down. That's what's happening right at the moment. We've seen that we just did a failure on that 62,459 structural resistance level. It's been confirmed. Now the 62,150, it has a negative CTKS gap. Now what does that mean? It means the price could move very, very quickly down if we get a sustained amount of negative momentum. But we start to get into some structural support at 61,140 all the way down to 60,649. As we're entering the weekend, we typically see a sort of consolidation through the weekend, so just expect that, unless we get a breakout to either side. Now, one thing to notice is this 62,459 level. I'm going to go to total next. Okay, going into total and marking up all of total's price history with level 1 and level 2 standard certification just made available through the indicator. We can see that this $2.12 trillion level on total was hit. You remember how it was hit on Bitcoin and it just flattened out. The entire crypto market was doing so at the same time. You can see that these support levels reflect back to around here and back to around here. This is how you want to read across charts. I put in a probable up and down zone of between around that 2.062 trillion to around 2.148 trillion. Of course, we're looking at the structure. Structure is incredibly important. Now, why hasn't Bitcoin fallen down so strongly? It's because of all of this structural support inside the entire crypto market. If we get sustained negative momentum, we would expect to underside retest the $2.098 trillion mark and make our way down. But just bear in mind that we could find structural support here and fling ourselves up. You must think in terms of 3 dimensions. At least you know where the structure is inside the particular chart, and you'll know how to read it across. I want to thank the many hundreds of people who have taken advantage so far of the $0 offer on the Profiting from CTKS Method structure course that will be released. Unfortunately, it's going to be a little bit delayed because I want to make sure that I answer all of the variety of so many questions that people have. But if you meet the requirements, you will get that course absolutely free, and you'll find it is utterly priceless. One thing I would suggest, if you're not in the service, you really need to be. It will literally save you so much time each and every month. I'll keep you updated as to when the course will be released, but just know it's improving in value every day, just specifically for you. So what do we know now? We know that Bitcoin hit a level of structural resistance, as did total crypto market cap, and that has backed away all of the other projects. You'll notice that one in particular is incredibly weak. That's ADA. Doge is a little weak as well. But ETH is holding up. ETH basically just follows the directional alignment of the combination of Bitcoin structural levels and total crypto market cap structural levels. I'll show you how important they are as we look at ETH's chart. Just popping on the indicator from the service, and level 1 and level 2 standard certification have been made and marked up on this chart. You can see that 2431 level of structural resistance, but you can also see that ETH is inheriting. If you're a programmer, you know all about inheritance. Inheritance is the way the charts gain their strength or weakness. But there's a big problem in ETH. If ETH starts to fall, it has a negative CTKS gap, literally all the way down to 2281. Don't be at all surprised if you see a lot of negative volatility inside ETH. But if we manage to get across that 2431, and that of course will depend on Bitcoin and total crypto market cap, we could rally up to the $2,500 mark, where we'll be greeted by an absolute wall of sellers. If you were looking at Ethereum's chart without the structure on it, it would be incredibly difficult to know where anything was. You would probably say, there's a level of structure here, because that's where all the longs have their stops. But if their longs have the stops there, and the market is coming down to liquidate them, that would actually create negative price momentum. You've got to be careful of what people say about where structure is. I can't stress enough how important it is to look at your charts from a structural bias nature. You know that when we looked at gold, the structure on the top prevented upward momentum, but the structure on the bottom caught negative price momentum. When we look at Bitcoin, we know that there's structural resistance there. Total crypto market cap, structural resistance. And you can see that blue line over ETH. ETH is controlled by Bitcoin and by Total, and Total and Bitcoin are controlling ETH by their structural levels. But it's the same exactly with Solana. Solana is also controlled by its own structure as well as the influence of these two charts. Looking at a reasonable trading range for Solana across the weekend, we would expect around that 138 to 149. Across the weekend, things can get pretty choppy, and choppy markets are beautiful if you know how to trade them. And we can trade them with BORSOG. It's very easy. When we know that when the NFP data came out, we had all this volatility inside the market. And then what did Solana do? Well, you're going to have a lot of technical people say, Solana hit a level of structural resistance there. But when you actually look into Solana's price chart across the 1,235 plus days of data, there is no structural resistance level there. That structural resistance is Bitcoin and total crypto market cap. I hope I've proved out how absolutely and utterly important it is to know Bitcoin and total first, and then to look at your chart third, not second, and definitely not first. The new course, Profiting from CTKS Method Structure, is all about reading structural levels, knowing when they pass, when they fail, how to overlay one chart on another chart conceptually. I've just given you a little bit of an introduction. Inside the course there will be, of course, much more. And there will be many secrets that I will never share in public. Another thing that you might like to note, you can see the structural levels of support at 142, just a little north of 141, and a little south, well, just around 140, and down around just a little bit south of the 138. This is a very different chart structure to Ethereum, isn't it? You must be able to cross-apply your structural comparisons to different charts to understand which chart is strong and which chart is weak. It's a vital skill. I'll talk more about it inside the class. Sometimes you'll often say, why is this chart holding up much better than the other chart? Or why did some particular project just crash and burn where the other one only went down a little bit? The answer is the clustering of structural support levels below the current price. Another thing to note, if Bitcoin and total start to turn around, we could see Solana rallying up to that 146.50 and above mark, so please bear that in mind. Always think from a bullish case and a bearish case and a neutral case simultaneously. I'll cover off more on that inside the class as well. But please note, everything comes down to structure. If you're trading Solana and you do not mark up your chart with level 1 and level 2 standard certification, which is literally the most powerful structural resistance levels and support levels inside TA, you're going to miss and get wrong-footed a lot. But then it's not just about that. You must cross-compare charts. You must cross-compare Bitcoin and total to Solana. And then you want to understand where the relative strength and relative weaknesses are inside your structure of that chart. But not just that chart, other charts as well. But Ken, that sounds like too much trouble. Okay, well, it kind of goes like this. If you treat the markets like a lottery, you'll probably get lottery results, which is like you don't win. Or you can reinvest your winnings. I think that's a very interesting turn of phrase. For example, you outlaid $10 on a lotto ticket, you get $5 back, and you can invest that 50% loss back so you lose it all. I always laugh when I hear that and I say, you know what you just said, and I tell them that. And they say, we have to say that. It's like McDonald's, do you want fries with that? Have a great day or night ahead, my friends, and please make sure that you fill in the form. It's available in the URL of the video description. And please make sure also that if you're not inside the service, get inside the service. You're just losing so much money because you don't know the structure. And the secret word for today is structure. Have a wonderful weekend ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.